Hi everyone, welcome back to Saheb Academy. Today in this 10th video of cash flow statement chapter, we are going to solve our 12th problem, and the question is from the ICAI study material illustration 5. The name of the question is Messrs M&T Limited. Alright, so this question we have to solve as per direct method. In the previous video also we have solved illustration 11 from the study material as per the direct method. Okay, now here you have to understand we have something special. Here the information is not given clearly regarding the purchases, so that adjustment is there. So that is why we are taking this question. Now you have to understand first, what do we do in direct method? Is there any change in investing activities? No. Is there any change in financing activities? No. It's always same, whether indirect or direct, financing and investing, the same format is there. Okay, yes, it's only the operating activity that changes. In indirect, we go from profit to cash flow from operating activities, and here we directly just pick and drop the things that are related with operating activities in direct method, isn't it? We do cherry picking. Whatever inflow is there of operating activity, we add. Whatever outflow is there of operating activity, we subtract. That's what we do. Is it clear? Simple. Now you have to understand there are 5 things over here. First, you have sales. Regarding sales, you have cash sales, credit sales. Cash sales directly you add. Credit sales you can't take. What you have to do, you have to see how much you have received from debtors, from receivables, and that is what you take. And then you have purchases. Can you take purchases directly? No. In purchases also you have cash purchases and credit purchases. Cash purchases you will directly subtract, but credit purchases you can't take. What you have to do, you have to see how much you have paid to your suppliers, yeah, to your creditors, to your payables. So that is what you will take. That will be the outflow. You will subtract both of these things. Fine. And then you have operating expenses. Yeah. The salaries you pay, the rent you pay, the electricity bill you pay, the telephone bill you pay, the operating expenses you will just simply subtract. Yeah. These are the things that are impacting the, what do you say, cash. Fine. And then the last thing is what? Not last, second last. That's the tax paid. As usual, you will deduct. And then the last thing is extraordinary items. Any cash flow that has happened because of extraordinary items which are related to operations of the company, then you will take it. Is it clear? Simple. That's how it is. Fine. So let's begin. Let's just read the question and let's see how we have to solve this question. Now see here. Prepare cash flow statement of Messrs M&T Limited for the year ended 31st March 2021 with the help of the following information. So here we have been given lots of information. As you can see, total 15 points are there. So let's just go one by one. See, first they are saying company sold goods for cash only. So it means, see, I told you first we will talk about sales, right? So in sales we have cash sales and credit sales. The question is saying this company is selling on cash basis only, no credit basis. So that means you don't have credit sales over here. Directly whatever sales you will find out over here, that sales will be what? That sales will be cash sales. Directly you can take that in the cash flow statement. You will add in the operating activity. Is it clear? Simple. Second point, gross profit ratio was 30% for the year. Gross profit amounts to 3,82,500. You see, what is the formula for calculating gross profit ratio? They have said gross profit ratio is 30%. Why have they given that? They have given that because you can calculate the sales from that. Okay, and you know complete sales are what? Cash sales. So easily you can find that out. See, gross profit formula is GP ratio is equal to GP divided by sales into 100. But forget about the 100, directly we will take the decimal. Okay, so see here, GP is how much? 3,82,500. Okay, fine, we have taken that. And then GP ratio is 30%, directly we will take the decimal 0.30 divide by X. Yeah, we don't know the sales. It's not given in the question. You have to find that out. And remember, the question has told you it's completely cash sales. So that would be completely cash sale, directly you can take. Fine. So how you will calculate? Simple, 3,82,500 divide by 0.30. Okay, that's what you will do and you will get the sales. Sales are how much? 12,75,000. Is it clear? What you have to do of this is completely cash sales. You will just add it in the operating activity. Simple and straightforward. Fine. So we have got the sales. The second thing is regarding purchases, right? So let's just see whether we have purchases over here. See the third point, opening inventory was lesser than closing inventory by 35,000. Okay, they're talking about inventory. Why are they talking about inventory? It is related with purchases. Right now, we are not clear about it. We'll just star mark it and we'll go forward. We will consider the next points. Okay, fine. So the fourth point is, see here, wages paid during the year 4,92,500. Really simple. It's operating expense. Yeah, the third element I talked about. So it's operating expense. So we will just subtract it in the operating activity. Fine, clear. Next we have, see, office and selling expenses paid during the year 75,000. Again, simple operating expense. We'll subtract in operating activity. It's an outflow. Okay, fine. Next we have, see, dividend paid. Dividend paid means financing activity. In financing, we'll subtract that. Clear? Then we have, see, bank loan repaid during the year 2,15,000, including interest 15,000. Now understand, both are what? Both are financing activity. Interest paid as well as loan repaid. Fine. But they are saying that in this 2,15,000, interest is included. So you have two options right now. Okay. The first option is you can show it separately. 2 lakh loan you have repaid, 15,000 interest you have paid. Or maybe you can take them together. That is 2,15,000 you will subtract from the financing activity by writing in the statement that bank loan repaid including interest. Is that clear? So it will just be deducted in financing activity because you're making the payment. Fine. Next, 8th point. Trade payables on 31st March 2020 exceed the balance on 31st March 2021 by 25,000. Why they have given that? Why do we need trade payables? Who are trade payables? Trade payables are the people whom we have to pay. They are our creditors. Payables, isn't it? So they are related with credit purchases. Fine. So there is an adjustment regarding that. So we'll see that later. Right now we'll just star mark it. Is it clear? Okay. Next point, see here, 9th point. Amount paid to trade payables during the year 4,60,000. See, what is this? This is what? This is the amount you have paid to suppliers, to your payables. How much? 4,60,000. I told you now, regarding purchases, what happens? Regarding purchases, there is credit purchase, there is cash purchase. Here they are telling you how much we have paid to trade payables. So regarding credit purchase, you are clear now. You can't take credit purchase, right? What do you take instead? You take how much you have paid to trade payables, isn't it? Yes. So it's given directly over here. Directly we can subtract this in the operating activity. Is that clear? So the question is silent regarding cash purchases, isn't it? The question has told us regarding credit purchase. They haven't said exactly how much is the credit purchase. No, they are just saying how much we have paid to the trade payables. Yeah. So that is what we take in cash flow statement now, how much we have paid to trade payables. So we'll take that. Regarding cash purchase, the question is silent. I told you in the conceptual video, whenever the question is silent regarding cash purchases, what do? We assume there are no cash purchases. Okay. Regarding sales, they have said something, so that's fine. But regarding purchase, the question is silent. So we can assume purchase is completely on credit. But we'll understand the logic by doing the adjustment and everything. Don't worry. Okay, fine. Next point. 10th point. Tax paid during the year amounts to 65,000. And then the question also has said that provision for taxation is there of 45,000. Yeah, closing balance they have given. So is that important for us? Provision for tax? No, it's not important. We will not see that because this is direct method. In indirect method, we need provision and all. Here we don't need provision and all. We'll just simply subtract the tax paid in the operating activity at last. Isn't it? Last second item it is. Yes. Then we also have extraordinary items, right? But in this question, there are no extraordinary items. So you don't have to worry about that. Then see, 11th point. Investments of 7 lakhs sold during the year at a profit of 20,000. So this point we also saw in the illustration 11, right? They gave us the cost and they gave us what? The profit. So what we have to do, we have to take the cost, add it with the profit, we'll get the sale value, and sale value will take it in the cash flow statement because that's the money we have received by selling of the investment. Is it clear? So 7 lakh plus 20, 7 lakh 20 we will add in investing activity, isn't it? Yes. And then we have depreciation. Is depreciation important for us in direct method? No. Depreciation is only important in indirect method. We reverse the non-cash thing, yeah, which has been taken to P&L. But in direct method, all this is not required. In direct method for operating activities, we just see what are the cash flows that has impacted the operations and we'll just take that. Yeah, that's what we do. So depreciation will be ignored. Is it clear? Simple. Then we have see plant and machinery purchased on 15 November 2020 for 2,50,000. So this is what? Investing activity. We have purchased plant and machinery. We have paid the money. So it is subtracted in investing activity. You all know that. And then last we have see cash and cash equivalents, opening balance and closing balance. Opening balance is 2 lakh and closing balance is 6,07,500. Okay, so 2 lakh and 6,07,500. How much change has happened? The change is positive, isn't it? In the current year, we have, in net received how much? 4,07,500. So at last, in the cash flow statement, your answer should come. Net increase of how much? 4,07,500. Is it clear? That's what your answer should come. Okay, fine, understood. So now I told you we are not clear about purchases. So let's just do the adjustment of purchases. It's really simple. What we have to do, we have to prepare the trading account. Okay, so trading account, you all know how to prepare it. It's really simple. See, they have told us the gross profit. So where the gross profit will come? Gross profit will come over here. See, trading account, gross profit, they have told 3,82,500. We have taken that. And then the question has also gave us the information about sales. So we found out the sales, and that was 12,75,000. So sales will come over here, 12,75,000. This is completely cash sales added in operating activity. Fine, no doubt about that. And then the question told us about the stock inventory. Opening inventory was lesser than closing inventory by 35,000. So closing inventory is more by how much? More by 35,000. So we don't know exactly the information. We'll just assume it is 1 lakh. Closing inventory is 1 lakh. So by closing inventory, closing stock 1 lakh. So how much will be the opening inventory? Less than the closing inventory by 35,000. That's what they said, right? So it will be 65,000 opening stock. These are assumed figures, okay, just to make you understand the logic. See here, okay, 65,000. And then see, wages paid are there. Wages paid are what? Direct expense. It will go in trading account. So to direct expense 4,92,500. Can we take office and selling expenses as well? No, that will be debited in profit and loss, not in trading account. Yeah, so if you try to balance this account, we will get the purchases over here as 4,35,000. Is it clear? Yeah, 12,75,000 plus 1 lakh, that's 13,75,000. 13,75,000 minus all the figures, all the black figures, you get 4,35,000 as the balancing figure. This is purchases. You all know now, purchase come on the debit side in trading account. So in this purchases, you have to understand it includes cash purchases as well as credit purchases. Now understand, okay, this is not exact purchase figure. This is not real figure because we don't have the complete information of closing and opening inventory, just the change we have. Okay, so this can be more also. Okay, here we are just understanding the logic. So see, cash purchases plus credit purchases. Now we have to find out how much are the credit purchases. Can we find that out? Yes, we can find that out because they have given us data regarding trade payables, isn't it? So we'll open the trade payables account, creditors account. Yeah. Now here also they have given us the same thing, not the exact figures. They have said, see, trade payables on 31st March 2020, opening balance exceed the balance on 31st March 2021. They are saying opening balance is more than the closing balance by 25,000. So we will assume the opening balance as 1 lakh, closing balance will be less, right? It will be less by 25,000, so 75,000. Okay, so on that basis, see, trade payables, yeah, creditors account only. So opening balance is 1 lakh, closing balance is 75. You understood now the assumption? Okay, then see, the question has told us how much we have paid to trade payables, to creditors. Yeah, how much we have paid, amount paid to trade payable during the year 4,60,000. So we have paid 4,60,000 to the trade payables. Yeah, trade payable is decreasing because we have paid them, liability is decreasing because we have made the payment of 4,60,000. Now this will be subtracted in operating activity. We haven't found this out. This is already given in the question. Is it clear? So what we can find out over here, we can find out how much are the credit purchases on assumed basis. Okay, 4,60,000 plus 75, that's 5,35,000, 5,35,000. 5,35,000 minus 1 lakh, that's equal to 4,35,000. So this is the credit purchase. Fine. So as you can see right now, 4,35,000, here also 4,35,000. It's equal. If it is equal, if the total purchases are equal to credit purchase, that means there are no cash purchases. Do you understand the logic? In this question, there are no cash purchases. It's completely credit purchase. Now I will tell you one thing. See, the trick is, whenever the question is silent regarding cash purchases, you have to assume the total purchases as credit purchases. Okay, that's the trick. I have explained this in the conceptual video also while explaining this small adjustment. Whenever question is silent regarding cash purchases or sales, cash sales, you have to assume the total purchases or the total sales are on credit only. Is it clear? That's how here it is. See, this complete 4,35,000 which is there, it's completely credit purchase. It's like that. But this can be more also. These are just assumed figures. Okay. So what you have to do, you don't have to do anything. Directly you have to take amount paid to trade payables 4,60,000. Fine. You will subtract it because that's the payment you have made. Cash purchases will not be there. It's zero. Is it clear? Simple and straightforward. Now let's just prepare the cash flow statement. Now see here we have the solution, the cash flow statement of Messrs M&T Limited for the year ending 31st March 2021. We are preparing this as per direct method. So first we start from cash flow from operating activities. Remember we have 5 things: sales, purchases, operating expenses, income tax paid, and then extraordinary items. In this question we don't have extraordinary items, so only 4 things are there, right? So regarding sales, in the question they said it's completely cash sales. We found out it is 12,75,000. There are no credit sales. So cash sales 12,75,000. Is it clear? If there was credit sales, then we would have taken what? How much we have received from debtors, from receivables. But it's not there. Leave it. Next, we have purchases, right? So regarding purchases also we found out everything. Yeah. And we found out there are only credit purchases. And how much we have paid to trade payables? We have paid 4,60,000. This is the amount that we have paid to creditors from whom we purchase goods on credit, right? So we'll just take that amount paid to trade payables. See a cash payment to trade payables minus 4,60,000 because that's an outflow. Next, we are done with credit purchase thing. That's the payment to trade payables. Do we have cash purchases? No. So cash purchases will not come. Then we have operating expenses. Yeah, the third stage you can say. If you see in the question, see here they have said wages paid 4,92,500. So that is what we have going to subtract. Okay, 4,92,500. And then the question told us we have what? Office and selling expenses paid during the year 75,000. So 75,000 we will subtract. Office and selling expenses paid. Is it clear? Okay. After this, do we have anything regarding operations in the question? See here. No, we have financing, and then yeah, we have tax. Okay, tax will come at last, and then investment. Yeah, and then here depreciation ignored, plant and machinery investment. So nothing of operating. So we'll just make a sum: 12,75,000 minus 4,60,000 minus 4,92,500 minus 75,000. That is equal to 2,47,500. This is called as cash generated from operations. We always do this. Yeah, we make a sum, then we subtract the tax paid. So tax paid is how much? 65,000. It's given in the question. They also gave us provision for tax, but provision for tax we have to ignore. So only 65,000 we will subtract. Clear? 2,47,500 minus 65,000, that is equal to 1,82,500. Now here we have got a positive figure. That means this much cash we have generated from operating activities. So net cash generated. Clear? Okay. Then we have to move on to the investing activities. Now in investing activities, if we see in the question, see here in the question, see investment, see here, where is it? Yeah, here we have sold investments, right? 7 lakh cost of investment and 20,000 is the profit that you have made on sale. So both you have to add and take. 7 lakh plus 20,000, that's 7,20,000, the sale value, because that much cash you have received. Clear? Simple. Next, we have purchased a plant. For how much we have purchased? We have purchased for 2,50,000, isn't it? Yes. So we have to subtract because we have paid the money to purchase the plant. The purchase of plant minus 250. Clear? So that's all, nothing else. So that's equal to 4,70,000. This is the cash that we have generated from investing activities. Is it clear? Okay. After this, we have to move on to the financing activities. In the financing activities, what has happened in the question? If we see, we have, see, dividend paid. How much? 30,000, right? So let's just take that. Okay, dividend paid, and then there is what? Bank loan repaid also is there. Yeah, 2,15,000, which is including the interest, right, of 15,000. So separately also you can show, or you can just, take it together. Repayment of bank loan including interest 2,15,000. Is it clear? And then dividend paid also, I told you that's 30,000. Yeah, that we have to subtract. Yeah, all these are payments, so we are subtracting it. Dividend paid 30,000. Clear? Okay. So 2,15,000 and 30,000. So if you make a sum of that, that's equal to 2,45,000 negative. Is it clear? Yes, net cash used in financing activities. It's negative, right? So that means this much cash we have lost because of financing activities. After this, what do? After this, you make a sum of all the net cash flows. 1,82,500 cash flow from operating activity, cash flow from investing activity 4,70,000, and then subtract 2,45,000, that is equal to 4,07,500. It's a positive figure, so we will say net increase in the current year because of all the activities. What has happened? This much cash has been increased in the business, in the company. So net increase in cash and cash equivalents. And then what you will do, you will take the opening and closing balance of cash and cash equivalent. Opening balance is 2 lakh, closing balance is 6,07,500. So opening balance is 2 lakh. 4,07,500 plus 2 lakh, that is equal to the closing balance 6,07,500. Okay, it should match with the balance sheet. That means your answer is right. Is it clear? So that's all. You all know this, how to do this, isn't it? Yes. So see here, financing activities, cash and cash equivalent, investing activities, and then you have operating activities. Fine. You understood, right? The ledger account we did just to understand the logic that there are no cash purchases. Fine. Okay. Easy. So that's it for this video. See you in the next video.